Many of you heard of this fancy trading term, ICT Killzones. Now, what are they and how can you use them in your trading? In this video, I will show you how to properly utilize the ICT Killzones in your trading to maximize your wins and capitalize on market expansion moves. For those of you here that are new to the channel, welcome. My name is Nick and I'm a multi-six-figure prop firm funded trader, and I run this channel together with William and Thomas. Now, we provide all of our content for free that includes educations and signals. We do not have a paid course, we do not sell signals, and therefore we do not have anything to sell you. Now, with that out of the way, let's get right into the video. So, what are Killzones? Killzones are specific time windows in which they have their own unique characteristics. Using this knowledge, you can identify which Killzone works best for you and your trading style, and how to navigate these trading windows properly. Now, let's touch on the Killzone timings. These timings will be in reference to the EST or the New York local time. The Asian range happens from 8 PM to 12 midnight EST. Now, the Australian, New Zealand and the Japanese pairs are the most active countries for this time of the day. Next, we have the London Killzone. This is from 2 AM to 5 AM. This is not to be confused with the London session open. Now, the Euro, the Pound, the Swiss franc as well as gold are the most active pairs traded in this session. This gives us volatility in the market to take out Asia consolidation ranges. Next up, we have the New York Killzone, which happens from 7 AM to 10 AM. Major pairs are the most ideal for this session. Some pairs that include the majors include the Euro dollar, Pound dollar, gold, and the Australian dollar. Now, lastly, we have the London close Killzone, which happens from 10 AM to 12 noon. This is where there is little to no opportunities to enter a trade, as price is doing some minor retracement before capping off the day. Now, this is the part you want to pay close attention to. There are different characteristics of respective Killzones and what a daily market profile typically looks like. For the Asian range, price consolidates between 20 to 30 pips on a daily basis. This generates the highest level of liquidity during the day. The London Killzone usually aims to take out the Asian liquidity levels before heading in its intended direction, which depends on the higher time frame bias. This is the session where the high and the low of the day is usually created. Next, we have the New York Killzone, and this is where price tends to retrace into the London expansion before expanding further later in the New York session. This allows the markets to come back and generate enough orders in order to continue heading in its intended direction. Lastly, we have the London close that creates the opposite high or low of the day and caps off the day. Now, the market typically moves from number 1, a consolidation, number 2, a sweep during the London or New York Killzone, and number 3, followed up by a expansion, number 4, followed by a retracement, and last but not least, number 5, continued expansion. However, there are some scenarios in which Asia creates the high or low of the day, or perhaps even New York retraces instead of expanding further up. Now, how do we ensure that we avoid such anomalies? Very simple. We need to know the higher time frame context. So let's go through what a typical daily profile would look like. Before I begin, I'm using this indicator to make it simple and easier to visualize the ICT Killzones on the chart. The name of this indicator is called the Sessions and ICT Killzones by Vincent139. So shout out to him for making it easier for all traders out there. I've gone into the settings and disabled all the sessions so that the charts don't look so messy. For reference, the orange box is the Asian range, the green box is the London Killzone and London close, the purple box is the New York Killzone. Now let's take a look at this example on the 50-minute Euro-US dollar chart. It created a 17-pip Asian range. As price came out of the Asian range, price swept the Asian low and started to reject towards the upside. Now that both Asian high and Asian low has been swept, price has shown bullish intention by sweeping the low first, followed by the high. So at this point, I mark out the 50-minute order block and placed a buy limit with stops covering the order block low, targeting a 1:3 risk to reward ratio. And let's see how this plays out. And after a while, there we go, TP hit. Now this is what a typical daily profile should look like. Now here is what a non-typical daily profile will look like. On the same 50-minute chart on the Euro-US dollar, we can see that a 15-minute range has formed during the Asia Killzone. Right after Asia, price swept the Asian high, and it should target the Asian low for its sweep. However, that wasn't the case. London Killzone retraced, but it didn't sweep the Asian low. Instead, it proceeded to expand massively towards the upside. Now, for price to come back into the Asian low after such a massive expansion is tough, as it requires a huge amount of orders to sell back past the London low and then sweep the Asian low. Therefore, it is highly unlikely for price to come back to sweep and would rather have a high chance to continue going up from here. So, what we are looking for over here is for price to retest the newly formed order block formed during the London Killzone, which coincidentally lines up with a 15-minute fair value gap as well. So I set a buy limit here with stocks below the 15-minute order block, targeting yet another 1:3 risk to reward ratio. Now let's see how this plays out. After a while, we smack TP again. Alright, so this is why higher time frame context is so important in trading. It is very easy to get lost in the low time frame price action, but what keeps us focused when we see the higher time frame is that we know where price is going to be headed in the higher time frame, and therefore we can shift our expectations accordingly on lower time frame as well. Alright, ladies and gentlemen, this concludes the end of the ICT video. I know it's a short video, but it's definitely packing a lot of value. So I've gone through what it is, how to use it, and how you can implement it into your trading strategy. So if you found value in this video, go ahead and comment down below what other videos that you want to see in this channel, and we will get it done for you. Last but not least, smash the like button to keep updated with the new videos that we'll be posting, as well as click the notification button to get notified when we go live daily on our London and New York streams on YouTube. And I'll see you on the next one.